All right, let's dig into American Tower's Q4 earnings. The call was on February 24th, and it was a classic beat and guide down quarter, which, as you know, always creates some serious volatility. So we're going to break down the results, get into the strategy, and figure out what it all means for the stock moving forward.
So here's the game plan. We'll kick things off with the earnings snapshot. Then we'll unpack the story management is telling. After that, we'll decode their guidance for the year, see how the market reacted to all this, and then wrap it up with our take in the next call.
Okay, first up, the earnings snapshot. Let's look at the headline numbers and see how American Tower stacked up against what Wall Street was expecting.
And as you can see, it was a solid quarter. No two ways about it. American Tower posted a clean beat on both revenue and AFFO per share, coming in nicely ahead of what the analysts were forecasting.
Now, for a REIT like this, the number you really want to watch is adjusted funds from operations, or AFFO per share. And they absolutely delivered here. They posted $2.63, a full 9 cents above consensus. That's a pretty strong 3.5% upside surprise.
And that strength wasn't just on the bottom line. You see it on the top line too. Revenue hit $2.74 billion, which was a good $60 million better than expected. So yeah, the core business was definitely humming along in the fourth quarter.
All right, section 2, the management story. Because behind those strong numbers, there was a huge strategic decision being made that basically reset the entire outlook for the next year.
And here it is, the big headline from the call. One of their customers, Dish, had a payment default. So what did management do? They didn't wait around. They decided to just rip the Band-Aid off and proactively remove 100% of all future revenue from Dish out of their 2026 guidance. And look, this wasn't some tiny rounding error. Dish was about 2% of their consolidated property revenue in 2025. By taking that completely off the books for the forecast, management basically handed themselves a pretty big growth headwind for 2026.
Now, to offset that news, management really hammered home the point that the underlying demand for their towers is still incredibly strong. They kept pointing to these big long-term trends, the 5G rollout, fixed wireless, and all the new demand coming from cloud and especially AI as the real story for the business.
The CEO, Steve Vondren, was especially bullish on AI. He basically said that as these new AI apps take off, they're just going to chew through mobile data. And what does that mean? It means you need more bandwidth, less latency, more capacity, which is exactly what American Tower provides.
So, let's put the pieces together. The quarter was good, but management took a major customer out of the forecast. So how did that all shake out in the official 2026 guidance? And more importantly, why did it initially freak out the market? Well, this is it. This is the slide that caused that initial knee-jerk sell-off. The company's own forecast for property revenue in 2026. It landed way below what Wall Street had penciled in. And this chart just puts that gap in perspective. You can see American Tower's midpoint guidance at $10.5 billion, while the street was up near $10.9 billion. That's a big miss. And it was almost entirely because they made that call to yank Dish from the numbers. Okay, on to section 4, the market's reaction. How did investors deal with this weird mix of a solid quarter, but, some pretty weak-looking guidance for the year ahead? The stock chart from that day tells a fantastic story. First, you have the immediate drop, about 2% in the pre-market, as the algorithms just reacted to that headline guidance miss. The selling continued when the market opened, with the stock hitting a low of around 187. But then the story changed, as people actually listened to the conference call and understood why the guide was down, that it was a proactive de-risking move. The stock mounted this huge comeback. It rallied all the way to a high of over 195 before settling in and finishing the day basically flat. It was a total round trip, from pure panic to calm understanding.
And that brings us to our final section, the next call. So, after you factor in the beat, the whole Dish situation, the guidance, and the market's wild ride, what's our actual thesis on American Tower stock from here?
It really boils down to this classic bull versus bear debate, right? The bulls are laser focused on those huge long-term demand drivers like 5G and AI. They look at the Dish move and say, that's smart, they're cleaning up the story. The bears, on the other hand, they can't get past that ugly headline guidance miss and the growth air pocket it creates in the short term. They're also worried about bigger things like interest rates or potential issues in other markets.
So the big question is, where do we come down in this whole debate?
We're initiating with a market perform rating on the stock. And here's the thinking behind that.
Look, our view is that management made the right call on Dish. It was painful, no doubt, but it was necessary. It de-risks the business long term, but it absolutely creates a headwind for growth right now. The big picture, the demand from 5G, from AI, that's all still there, and that's a powerful tailwind. But we think the stock is probably going to be stuck in a trading range for a bit. The market is basically in show-me mode. It wants to see proof that the organic growth can really re-accelerate now that the Dish drama is over. And frankly, that's exactly the balanced view the market itself settled on by the end of earnings day.
This is not financial advice.